Are you looking to invest in the simplest possible way? Then you're going to want a global ETF as the backbone of your portfolio. For many years, Vanguard's FTSE All World was the king, but in recent years, more funds have come onto the market and fees have come down massively. So the question is, has it been knocked off of its throne? What is the best global ETF for 2026? In this video, you'll find out, as we're going to be ranking 12 different global ETFs from S tier to F tier. I'm excited. Let's get into it. This is the key criteria we're going to be using to assess these ETFs. The lower the fees, the better, as there's more money in our pocket compounding, and the more diversification, the better. The more diversification means there's more stocks in the fund and it's more globally diversified. And how many stocks in a specific ETF largely depends on the index that it's tracking. All of the ETFs we're going to be covering in the video also meet the following criteria on screen. They're provided by large, well-known, reputable fund managers. They all have a minimum fund size of $1 billion, meaning they're less likely to close down. They have lower spreads, higher liquidity. They're domiciled in Ireland for tax efficiency. The funds are available to UK investors and denominated in pounds, so we avoid any FX fees, and they replicate the index in a good way. You'll notice we aren't using past performance when we're assessing these different ETFs. Why? I personally don't like to include this, as ultimately, and literally every disclaimer on any investing website ever says, past performance is not a measure or indicator of future returns. So it's better to pick an ETF based on your preferences and risk tolerance using the criteria that we went through instead. So which low-cost global ETF is best? Straight away, I'm putting these 4 ETFs into F tier. Why? As they're not truly global. Although all of these 4 ETFs track an index called the MSCI World, which, I mean, that does sound global, this index only tracks developed markets, which means stocks from developed countries like America, Japan, the UK. It doesn't invest into stocks or companies from emerging markets like China, India, Taiwan. Of course, it is still diversified. The MSCI World Index has 23 developed markets in the index and includes over 1,000 stocks. However, it excludes emerging markets. So in my personal opinion, these ETFs are not truly global. And that goes for any ETF that tracks the MSCI World Index, and there's a lot, as you can see. Including this UBS one, which has the lowest fee at 0.06%, unfortunately, F tier. Similar to VHVG from Vanguard and LGGG from Legal & General, unfortunately, both F tier. I know, it's pretty brutal out here, isn't it? But this, once again, is for the exact same reason. Vanguard tracks the FTSE Developed World, and LNG tracks the bit of monster jargon, selective core developed markets, large and mid cap. Drop that little line on your next Tinder date, see how well it goes down. These 2 indexes also exclude emerging markets. Not to say any of these are bad funds, none of them are. They're low fee, they're diversified, but if you're looking for the best global ETF, then in my opinion, these are not the ones to go for because they're not truly global. Right, let's move on to some actual global ETFs, and we're gonna now assess these ones on screen. Starting with SSAC and ACWI. Both of these ETFs track the MSCI All Country World Index. This is a much more global index as it includes both developed markets and emerging markets. So we're off to a good start. This index tracks 23 developed markets and 24 emerging markets, including over 2,500 stocks. This means it covers approximately 85% of the total global stock market. This makes it more diversified than the previously mentioned ETFs and a truly global fund. Both of these ETFs are offered by huge and reputable fund managers, iShares owned by BlackRock and State Street. They both also have pretty much identical returns over the last 5 years. However, there are 2 key differences. Firstly, ACWI is lower fee. It was previously 0.4%, but it was cut in August 2024 to 0.12%. This makes it nearly 50% cheaper than SSAC at 0.2%, and actually the second cheapest global fund on this list. ACWI also includes more of the stocks in the index, over 2,000 stocks compared to SSAC, which has about 1,700. This means the ACWI State Street Spider ETF has lower fees and more diversification. So let's add these 2 ETFs into our rankings. SSAC is C tier. It's a great fund with a huge amount of assets in the fund and a great track record, but it does have higher fees compared to other options on this list, and it does include less stocks than other options on this list too. However, ACWI, straight into S tier. Boom, our first S tier global ETF. Why? Because it's massively diversified with over 2,000 stocks in the fund, but a tiny fee of 0.12%. State Street have really put this global ETF on the map and it's straight in S tier. Whilst we're on these MSCI indexes, this ETF is another option. This tracks the MSCI, ACWI, IMI, another monster bit of jargon, and it is a similar index to the previous one. However, this index also includes small cap stocks. This means there's over 8,000 constituents or stocks in the index, which is insane and unbelievable diversification. However, unfortunately, for this specific ETF, there is no pound version available, only dollar or euro versions. I mean, you can see the ETF includes over 4,000 stocks for a tiny fee of 0.17%. For now, it's just an honourable mention and something to look out for, because if a pound version ever becomes available, this could quickly become one of the best global ETFs for UK investors. Let's keep going. We've got a few more global ETFs to get through. Next up, we have PACW. You might not have heard of this one. It's the new kid on the block. Inception of this ETF was quite recently in February 2024. It tracks the selective GBS global markets large and mid cap. Another monster bit of jargon, but in short and similar to the previous ETFs mentioned, this means that it includes both developed markets and emerging markets, and similarly covers about 85% of the global stock market, making this another truly global fund. The ETF is provided by IMID, a less well-known fund manager, and they have had issues in the past of closing funds down, which has been a little bit problematic, but overall, they're still a large and reputable fund manager. So let's once again go through our key ETF assessing criteria. The fee is absolutely rock bottom, 0.07%. This is the lowest fee global ETF available for UK investors. The reason why is because Selective, the index provider, have lower licensing fees compared to FTSE or MSCI. Essentially, this means fund providers like IMID can then track this index for a lower cost, so can offer ETFs to investors for a lower fee. The PACW ETF also includes over 3,500 stocks, which is insane diversification. As you can see, the returns are pretty much identical since its inception in 2024 compared to the two previous global ETFs. What's the downside? Unfortunately, there is no accumulation version denominated in pounds for UK investors yet. And it's got less of a track record as it's relatively new. It's only been around since February 2024. So where is this going to go in our list? You know what? And I thought about this one a lot, but due to it being the lowest fee ETF and having huge diversification, it's going in A tier. Once this fund has an accumulation version and has a longer track record, it could quickly become S tier and maybe even the best global ETF for UK investors. Now, let's move on to VWRP and FWRG. Will VWRP, the king of global ETFs, get into S tier? Now, these two ETFs track the FTSE All World. This index, once again, includes developed markets and emerging markets, so it's truly global. The FTSE All World has over 4,000 constituents, covering 90 to 95% of the total global stock market. This is even more diversified than the previous indexes. Both of these ETFs offered again by huge and reputable fund managers, Vanguard and Invesco. However, there are some differences between them. Firstly, Invesco's option is lower fee at 0.15%. Vanguard's version was recently cut from 0.22%, but it is still more expensive than Invesco's at 0.19%. However, Vanguard's ETF includes more of the stocks from the FTSE All World Index, over 3,500, making it more diversified. Invesco's version is much newer. It's only been around since July 2023, which I think is why it's tracking fewer stocks, although it still does track over 2,500, which is great diversification. As you can see, the returns are pretty much identical since the inception of Invesco's fund in 2023. For VWRP, this was so close to being S tier, but I'm putting it in A tier. We'll call it A+. It's been the gold standard for global ETFs for years, with Vanguard really being the best brand name and this ETF having a long and great track record. However, due to it being relatively high fee now compared to some other competitors, I've got to cap it at A tier. FWRG is also going in A tier. Why? Because it's got a low fee and tracks thousands of stocks, making it another great global ETF option. Now, before we summarize and conclude, a few important points to make. I talked about MSCI, FTSE and selective indexes. Whilst there are some nuances between these index providers, they all essentially do the same thing. Secondly, you'll notice that I left out the FTSE Global All Cap and some other index funds. This is because they're not ETFs, So I'm conscious they're not available on that many investment platforms. ETFs are much more accessible. But I've summarized all of this into one global index fund and ETF cheat sheet. If you want this, you can download it for free in the link in the description. Of the main 5 global ETFs that we've ranked here, you can see the returns of the 5 different funds are literally identical. Honestly, they're all great. Just pick one and stick with it. From the lowest fee perspective, PACW wins. From a brand name and reputation perspective, VWRP wins. From an all-round perspective, ACWI wins. And the fact we've ranked so many of these ETFs in the A tier and above just shows you that all great options and the differences between them are so minor and nuanced. But there's only one S tier one, and that is ACWI for now. And that is the best global ETFs ranked for 2026 for UK investors. I hope this video has been helpful. If anything changes, if new funds come onto the market, if fees get cut, I'll be sure to make videos on it. So subscribe so you're in the know and you won't miss it. I'm also going to be releasing much more global ETF content going forward. But in the meantime, your money will not grow unless you actually start investing. So if you want to learn exactly how to start investing in 2026 in 4 simple steps, watch this video next and get your investment portfolio set up to grow completely on autopilot from 2026 and beyond. Thanks for watching.